U.S. stocks took a bit of a breather on Monday as investors turned their focus to a key inflation reading later this week. The Dow closed down nearly 0.2%. The S&P 500 gained fractionally, and the Nasdaq closed up 0.2. For most of the day, stocks struggled for direction amid disappointing earnings from Tyson Foods and drug manufacturer Catalent, and a short-lived rebound in regional banks. PacWest Bancorp surged roughly 30% earlier in the session after the lender sharply cut its quarterly dividend to boost capital. But those gains were pared way back to just under 4% by the session's end. And while he doesn't see the banking turmoil as systemic, Eric Lynch, managing director at Scharf Investments, believes it's too soon to hop back into financials.
The issue with banks is that, investors want to wish that the issue is over quickly. That's just not how it works. There's a lot of shoes to drop. So because it's so hard to kind of ascertain a bank's kind of quality of their assets, it's just, in our opinion, just better to take a pass and to get a better risk-adjusted return out elsewhere.
Meanwhile, shares of Catalent tumbled more than 25% as the contract drug manufacturer saw lower revenue and core profit in 2023. And Tyson Foods tanked more than 16% on a surprise second quarter loss and a cut in its annual revenue forecast. The spotlight now turns to the Labor Department's inflation reading on Wednesday, which is expected to show the Consumer Price Index likely climbed 0.4% in April after gaining 0.1% in March. Producer prices, weekly jobless claims, and consumer sentiment data are also all lined up for this week.